Welcome to the Your Business on Purpose podcast, the ultimate resource for women business owners looking to confidently navigate their entrepreneurial journey while upholding their principles. I'm Dawnette Palmore, your host and fellow entrepreneur. Join me as we immerse ourselves in illuminating conversations with accomplished experts spanning various fields across the business spectrum. Together, we'll unearth strategic insights into seizing opportunities and ensuring that your business is equipped with the essential elements aligned with your purpose and values. Welcome back to Your Business on Purpose podcast. I am Dawnette Palmore, your host, and today we're having a very practical conversation. We talk a lot on this podcast about mindset, we talk about leadership, and of course, long-term strategy, but none of that really works without daily financial habits. Because business isn't built in big dramatic moments. It's built in small, consistent decisions that we make. And today's guest understands that deeply. Jenny Groberg is a wife, a mom of 5, and the founder of BookSmarts Accounting and Bookkeeping. She leads an all-female team and has built a nationally recognized firm that's been featured in Forbes, The Wall Street Journal, NASDAQ, U.S. News and World Report, and many more. She's also received 4 international Stevie Awards and was named in the Inc. Female Founders 500 list. But what I appreciate most about Jenny is that she helps women understand their numbers in a way that feels doable, not overwhelming. And we all need a little bit more of that. So today we're talking about the top 5 things entrepreneurs can do every single day to save money. Jenny, I'm so glad you're here. Welcome to the show.
Thank you.
Oh my gosh, this is going to be an exciting conversation because we're talking about money and I talk about money, and great. I love it. We're going to have a good time. So what made you decide to build an all-female accounting and bookkeeping firm?
So it was not intentional, actually. I started out just trying to pay our bills. My husband was in med school and I was a CFO. And then over the course of different patent lawsuits and things, the company dissolved. And so he finished his med school. Well, he finished his 3rd year. We moved back and he has to do rotations all over the country, but I couldn't afford to go with him. I had 2 little kids. So I had to move in with my parents. And it was the worst. I didn't have $2 to rub together. We're living on very modest student loans and trying to pay his expenses. And I just realized I have to get work. I have to do something. And childcare options were very slim. My mom worked, my dad worked. And so I just started consulting. And I would do a consultation. And then oftentimes the client would say, you know what, Jenny, this just makes more sense for you to do this for me. And they would offload their work to me. And so it began actually just totally organically. And then it got to the point where I have 3 little kids and I'm staying up till 2 a.m. doing client work and I have a nursing baby. And I told my husband, I'm like, I actually physically cannot sustain this anymore. And I think I was grossing about $30,000, which was more than my husband was making in residency. So it was a big deal, but all the same, it was unsustainable. And then I realized I'm going to hire someone to help me. That had never crossed my mind. I didn't have any mentors, female mentors, business mentors. And so I wish that I could have had a little bit of help in navigating that. But I hired my first employee, and that was really the first switch point in our growth. And then I would continue getting more client work, and I would continue pitching it to her, and then I would hire more people. But all the work was done remotely. And I felt just really strongly that this was 17, 18 years ago. I did not have remote work options available to me.
Right.
And so because I'd been able to create it, I was pretty firm in that this had to be something that could help women, because I knew what it felt like to not be able to help myself and I didn't want to leave my kids. And so from there on, all the work was done by women who work remotely. So I have about 15 employees in Utah and about 20 to 25 outside of Utah.
That's amazing. So what did you use back then? Because what did we have? I can't remember what it was called. We only had one video app out there.
So I put Parallels on my MacBook, and then I had Go to My PC, and then everyone was using desktop. So I'd remote in through Go to My PC, and I would typically be working in their file at night after they'd left.
Oh, wow.
So,
yes, I've used that before too.
Yeah.
Okay, that's
Yeah.
so interesting. I love that. I love how innovative you can be when you need to be, right? Like,
Yeah.
let's
When you
just get
have
this
to
figured
be.
out because I don't want to leave. I have my kids here.
Yeah.
I love it. Wow. Okay. What is the name of that app that used to just the video chat? Why can't I think of it? Anyways, okay.
Well, for
It'll
a
come
long time, it was just me and one
to
or two employees, and it was just what we had to do. But I would go and get more client work, and it just grew. And it's fun
me.
because some of the clients that I had 17 years ago, they're still my clients now, and they've gone from being an employee at their dad's car dealership to starting their own salon and franchising it, and now we're
Oh,
supporting over 150 of his franchisees. One client started, the startup with hair extensions and feathers, because feathers were a thing
I
with
remember
with
that.
Paula Abdul on American Idol, and I've seen them go from inception to selling at $950 million.
Wow.
So it's cool that these relationships, these businesses, as they grow, I grow with them, and those relationships are what's sustaining everything.
I love it. That's amazing. And what a great thing that you got to be part of that, watching them grow and being
It's
able to
true.
help them grow. Because if they had not had their numbers in order, if they had not had you or somebody like you, they would not have been the success that they are. I mean, that's
It's true.
really, I don't know the statistic off the top of my head, but I think it's about 80% of small businesses close their door because of, not because they're not making money, not because they don't have clients or inventory or any of that. It's because they don't manage their cash flow correctly,
Yeah,
which,
that's exactly
especially as
it.
entrepreneurs, we're like, oh, that looks great. Let's buy that. Oh, that's great. That's going to help me. And really, that's not strategic.
Yeah, it's
So that
100% a cash flow issue.
is exactly, exactly. So you talk about 5 things entrepreneurs can do to save money. Why do you think daily habits work better than just monthly reviews?
Because it gives you a target.
Mm,
You have a mark that you're aiming at. If you don't look at your numbers, you're going about your day, you're all over the place. And I think having this pinpoint target every day that you can focus on and refocus on, even if you don't hit the target, if you're within that vicinity, that's 80% of it, right? So I came up with the final 5, and it's reviewing the last 5 minutes of your day. You need to review 5 financial reports. And the reason is because entrepreneurs especially are putting out whatever fire is right in front of them.
yeah.
It's emotional. It's, oh, you need this, you need this. Okay, you're the loudest voice, or you're demanding this from me. And we tend to focus on what is right in front of us. Entrepreneurs have a really hard time getting through the weeds and focusing on what will really drive their profitability. So if the last 5 minutes of your day you can review these five financial reports, it helps you make strategic decisions based on numerical evidence, based on numbers rather than emotion, right? So if you look at your profit and loss every day, you look at your accounts receivable, you know what money's coming in, and then you look at your accounts payable. You know what money's coming in, you have an idea of what bills are going to be paid. You look at your statement of cash flows. And then lastly, you look at your sales by customer summary. And we can go into more depth on all of these. But if you look at your sales by customer summary, you can see what customers are driving the most revenue. And that's where you need to focus. It's the 80-20 rule. 80% of entrepreneurs are focusing on 20% of things that don't generate any money, or they're focusing on that loud client that's not really that profitable, that's taking up 80% of their time. So if you can look at the sales by customer summary and see, these are my clients that are actually giving me the most business, and I have the most profitability on them, that's where you should be focusing. And you need to get out of the weeds on these other things that are distractions to help you drive your profitability. So the last 5 minutes of the day, review those 5 financial reports. It was fun. I did that article. An entrepreneur picked it up, and then they did a reel on Instagram. The editor of Entrepreneur Magazine
Oh,
did
that's awesome. I
this
love
little
it.
cute reel about the final 5. So it's something that everybody needs to do, just no one is doing it because they don't have time and they don't think about it.
They don't think they have time.
Yeah, they don't
Or they're
think they.
not making the time. So that would mean if they were doing these reports, they would have to, everything would have to be in their accounting system every day, right?
So a lot of times, if you are maybe not all of your expenses will be in your accounting software. Let's just say, the majority of people use QuickBooks. But if you're invoicing, your AR is going to be in there. If you
Okay.
have an accounting team like BookSmarts doing your operational accounting, you should know every week what your expenses are. So you'll know your accounts payable. If you have a profit and loss, even if it's not perfect, it again just helps you focus better.
Yes.
So, your accounting should be caught up, at least it depends on how large you are. If you're a really large $1 million company, they should be done at least every week or every day. If you're a smaller company, once a month is probably sufficient. However, just by reminding yourself, just by looking at your financials and seeing, okay, here's my profit and loss. How am I doing? It's just that reminder of, okay, this is where I'm at. Even if the data is not 100% accurate, it's just that reminder of what to focus on. Another thing I think that entrepreneurs need to do is compare 3 periods of time. So if you run a profit and loss, run a P&L from 3 data points. So it could be 3 months side by side. It could be 3 years side by side. And so when you run the P&L, run it and look at the last 3 months and look at how you're doing. Is your cost of goods increasing pretty dramatically, but your revenue is staying flat? If that's the case, you need to raise your prices. It might be that you need to outsource or source your product from a different supplier because your costs are increasing if you don't feel like you can increase your revenue. But by looking at those 3 data points, you can see trends and know where you need to pivot and make a move. If your payroll is increasing pretty dramatically, but again, your revenue isn't matching that same curve, then that could be a trigger that you either need to hire cheaper help, or perhaps people have overtime and that triggers another hire. It could be a variety of things, but that's where you really need to be looking at your numbers to help drive your decision making. And if you look at the last 3 years, it also helps motivate you. Like, doing really great here. I'm growing, but the numbers aren't going to lie, and they're going to be what helps you make better strategic decisions.
That's right. And I love that. And that's what we need, right? We have to look at the raw data at what's going on so that we can make those decisions, so we can see where we need to pivot, where we need to increase, where we need to focus.
Right.
And like you said, so many people aren't looking at this. And I think a lot of it's because they're scared. They're like, I don't know how to read a P&L. I don't know how to read this stuff. But once you learn, it's so easy. You're just like, oh, okay, this is where I'm at. Okay, what do we do about this? It's almost like when you were talking about, these 5, it's like your checkbook of business, right? It's
True.
it's keeping you in balance and telling you, like, it's getting low. We need to figure out what we're going to do. This isn't balancing anymore. What do we need to do to get this up? Or even, hey, my profit is down,
Right.
and if your profit's down, something in your business is going to suffer, if not your own paycheck, which is usually what happens with entrepreneurs, right? They tend not to pay themselves. So that's huge. So how can we, I would say, thinking about the entrepreneur and they're thinking about, oh my gosh, numbers and reports, how can we ease them and make it be easier for them to digest this and see that it's really not that hard?
It actually isn't that hard. And if somebody wants me to teach them how to read the financial statements, ping me. I would be happy to do that. It's so fun. It's so fun because it shows you how much you're making. It's pretty simple. The profit and loss is just going to break out your total revenue, how much you've invoiced. It's going to deduct the cost of goods sold. And when I explain this, when I teach or when I have a consultation with my clients, I explain that the cost of goods sold is anything that is left with the customer when the job is done. So if you're building a house and you have lumber and tile and wood and paint and all of these things that go into the house, at the end of the day, when you walk away from that house and sell it, anything that stays in the house with the customer is cost of goods. But if you brought a hammer or a saw or tools or equipment, you carry that with you when you leave. So that is just going to be an expense. So again, cost of goods is anything that's left with the customer. So if you sell shoes, that product, the box, the shoe, the packaging, that's going to be a cost of goods. It goes with the customer. Anything else is going to be an expense. So your rent, your utilities, cell phone, payroll, all those other variable things. And so, the P&L is going to have your revenue, your cost of goods, and then all of your other expenses. And then you're left with your net income. So at the end of the day, if you're a fisherman and you put that net over your shoulder, at the end of the day, that's what you bring home. So the net income is going to be, as a business owner, what you've made. Now, I had one client early on in my career who had this incredible business. I loved working there. She did flowers, and it just smelled good. The product was beautiful, the most incredible arrangements I've ever seen. But I noticed that, she would put things together and say, oh, it needs a few more flowers and it needs more ribbon. And in my head, I'm calculating, okay, you just added probably $4 to that arrangement, and it wasn't being tracked or monitored. It was gorgeous. But she was in her creative mode, and that's where she should be. So I think that if you are not if this isn't your wheelhouse, it's okay. You pitch it to somebody who is an expert at it, and it's a low spend. I think some of my cheapest, most basic accounts are only $500 a month. You can't hire an employee, a low-level employee, for $500 a month. And with my team, we have data entry, we have bookkeepers, we have accountants and CPAs. And every client has a bundle of this skill set or this team working on your account. So let me share another example. I had another client once who it looked like they were really profitable. You look at the profit and loss and they're showing profit. But you look at the balance sheet and they owe a ton in sales tax that they haven't paid. And they owe payroll liabilities that they're behind on. And they have a lot of credit card debt because they're using their credit cards for personal expenses. And then they're getting charged just huge penalties for overdrafts. And that was on their checking account. This one client, I think every month had at least $1,000 of overdraft fees. Oh. And then they have the interest on their credit cards. So you can't just look at your profit and loss and say, I'm doing great. You also need to look at the other reports to say, well, am I actually? And how much debt do I have? And the less debt you have, the more solvent you're going to be. And when things happen in the economy, there's tariffs, there's interest rate adjustments, you're going to be able to weather those storms. But if you have a lot of debt, it's going to be so much harder.
I love that you say that because when I talk to women specifically, they're so focused on funding. And I'm thinking, if you get all these loans, how in the world are you going to pay it back? Right? You're going to end up, your business is going to run off them, and you don't want to be that way. So I'm glad that you said that, because the banks have got us to where we need to, it's embedded in us that we need to get loans to be in business.
True. It's true. I have a client who hated corporate finance, hated just the industry. He was working his guts out, and he and his wife thought, let's buy a franchise. They used 401ks. They mortgaged their house, second mortgaged their house to help fund it. They took out loans, and the economy was such that people weren't buying the service like they thought. And then they set up a second location because the franchisor was pressing them, you have to build within 6 months or you're going to lose the location. The problem is they had so much debt and they weren't generating the revenue. They had nothing to sustain them. I think they really, really worked hard for about 2 years, and then it became apparent that one of them had to go work full-time to support themselves. So I would say never, ever start a business without having some proof or work on it as a second job. Yes, you're going to work your guts out, but get it up and running, prove the concept, prove that it's sustainable before you leverage your home, before you get bank loans, make sure those other things are in place. Like my job, 100% late nights, making sure it's off the ground. I would never, make a purchase unless I had enough in the bank to cover it. For example, when I hired my first employee, I was scared to death to be able to sustain her. If I lost an account, I thought her family and her livelihood is on my shoulders. Yeah. So before I hired her, I made sure I had 3 months worth of her pay in my savings account, just as a backup. So if you want to start a business, go get a job or get a second job, get enough money to be able to fund it or to get it going, and then make sure it's not your one and only ticket, because often it takes a long time for a startup to get going.
It does. And I think a lot of people don't realize that, especially because we have social media saying, oh, I made $10,000. I just did this video. And it's like, that's not really what happened. But I love this real raw conversation because I think, people need to really think things through. They need to have a plan. And like you said, they think, oh, I'm just going to open this business and people are going to flood in, but nobody even knows you exist yet. There's marketing, there's getting out there, and that takes time. You have to build trust with with society, with the community, with your potential client and customer, and that takes time.
It does take time. Even if you have a parent company or a franchisor doing marketing for you, it depends on the location. One location we thought would do really well because it's in a more affluent area for this franchise. Their sales were not great as compared to a different location. It was really interesting to watch how that unfolded. Another thing is when the business owners visited other franchise locations, they didn't account for all of these little expenses. There were little product expenses that weren't in the P&L and not part of the pro forma. And they didn't realize that until they got into business. And then they thought, wow, all of these little products and things, or the product that they were selling, this one location decided to do a better product and it was more expensive. So I would say whatever your plan is, whatever you think, add 30%. Because that's more accurate. You're just not going to know everything. So you really have to proof test it with a 30% increase to make sure that it's sustainable.
I love it.
Whatever that looks like.
Yeah, exactly. That's just like in anything. If you go on vacation, you plan an extra 30%.
Exactly.
If you do housing, if you're building a house, whatever it is, you plan for that extra 30%.
Exactly.
Because it's the unknowns or the things that just pop up because that's just the way that things happen.
It's true.
And we don't know that till we have experience. So if someone is saying, oh my gosh, my books are a mess, I don't even know where to start, how can they find you?
So I'm on LinkedIn, Jenny Groberg, and also BookSmarts. BookSmarts Pro, I think, is maybe the LinkedIn. And on Instagram, BookSmarts Pro. But our website is booksmartspro.com. And, feel free to reach out to us. We'd be happy to help. We do cleanups. We do, I have some really small clients and I work with startups. And I would say if you are a startup, a lot of people will say, well, I'm going to invest in construction, but I'm not going to invest in my accounting. And they don't feel the value in the spend. The problem is you're going to get killed on taxes because there's so many things where you're putting your own money into the business and you want to account for that. You want to make sure that everything is tracked, and I promise you will end up saving way more money on your taxes than you think the accounting is going to cost you. So that would be my first tip. The second tip is to make sure that you're doing it on an ongoing basis. And if you're not, my team, we do cleanups. We, will help our business owners with our franchises. We'll do a monthly call and educate and help them. So there's a lot of resources, but I think it's important that you have a partner, whether it's me or someone else. You pick a partner that you trust and that gives you attention and that strategic help. Because, anybody can plug in numbers. Are they doing it correctly? Are they building your balance sheet right? Are you maximizing every tax deduction? Do they understand the one big beautiful bill and the different nuances that are coming with that? Like that changes so many things. You can't deduct entertainment. It used to be that you could deduct that. If you're providing snacks to your staff, that's kind of in limbo with the IRS. So you really need somebody that can understand what's happening and then make sure that you're getting those deductions. So right. BookSmartsPro.com, and we're happy to help, but I know that there's a lot of other amazing firms also. Just make sure that you do your discovery. I had one client once that called me and said, I found you online, but I want a background check, a credit check, and I want a client list. And I thought, who are you? Are you like in the mafia or what? And I thought, this is kind of nerve-wracking. I don't know you. Did the background check, did the credit check. And he took my client list and he called every one of my clients to check our work. He also, is in charge of a family office with millions and millions of dollars and over 80 entities that we service. I didn't know this at the time, but then not only did he check our work, but then he checked on the tax work as well. And he really did his homework. And I think it's good to do your homework.
Yeah.
So if you're vetting out a partner, whoever that may be, call 2 or 3 of their clients and check their work and see how happy that business owner is with them. Because a lot of times it feels like you're shooting in the dark and you're not really sure, I hope this person is a good fit. So, check their work, check with their clients, check their website, check their social, see what they're doing, see how happy their clients are. And that will help people really be able to discern who to choose as a partner.
That's a good word right there. Do some checking, because I think sometimes we get, and do it before you're in a desperate situation, right? Because then you're just going to hire anybody. That
Yes.
happened to me a few years ago with this tax situation. I end up hiring this company, and then I'm talking to the guy and he's like, "Oh, I'm still in school." And I was like, "What?"
Oh, really?
What? But the company was allowing them to work under their license and do this, and I'm just like, "But you don't even know what I'm talking about." But okay. So
I hired
do your
a
work. Do your homework.
that I thought would be great. It was a social media and marketing team, and I was assigned an intern, and the intern had no clue how to do anything. And they didn't tell me it was an intern. I found out later, but just couldn't make things work. And also, just because someone has a good social media doesn't mean that they're necessarily going to be a good business partner. They just may have a really good social media team. So check with clients.
Yeah. All right. This was an amazing conversation. I knew it would be because we speak the same language. So Jenny, thank you so much. And all of her information will be in the show notes. So make sure you go click on her, you follow her, if you need her, make sure that you're making an appointment and talking to her. There's nothing wrong with having conversations. And we both say, have lots of conversations and find out what is the perfect fit for you. So it's really easy to think, saving money in business requires big changes, but most of the time it really comes down to awareness and consistency. So if you've been avoiding your numbers, let this be your nudge, your push, your pull. One habit, one shift, one daily check-in can change everything for you. So again, Jenny, thank you so much for the work that you're doing to support not just women business owners, but business owners in general, because this can be such a burden for some of us. So we appreciate the work that you do. And to everyone listening, if this episode helped you, if it spoke to you, send it to another woman in business who needs it. Let's share, let's spread, and let's empower women to gain control of their finances so that they can grow and they can just build these amazing businesses that not only help their own families, like Jenny said earlier, it's helping other families, their employees, and so on. So thank you so much. And until next time, have a great day. This podcast is dedicated to you and all the incredible women out there breaking chains, pushing through, and striving to make it all work. Your support truly means the world to me. Could you do me a favor? Be a gem and leave a review. It will help us reach even more women, making a bigger impact. Your feedback is invaluable, and I would genuinely appreciate it. Don't forget to hit that like button and subscribe, ensuring you never miss an episode. Until next week, live a purposeful life in both your business and your finances.